Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Thanks for tuning in. Great to have you with us. Alex, Costa.
Morning.
Morning. And back with us today.
Thanks for having me.
It's good to have you here. So we've done other podcasts together on SPI and so forth. So great to have you on Broker Daily.
Thank you.
It's been a bit of a washout this weekend. I don't know where you're listening, where you're tuning in from, but certainly Sydney has been horrific.
Yeah, well, I've been moving all weekend. So for me, even if it was sunny, I wasn't getting out and about. So I was happy with the rain. But yeah, probably a bit too much.
I did try and play golf and I got rained out of it.
For my bad guidance, I decided to do a trail run on Sunday. I'd booked in with my daughter and it was hammering down Saturday night and they sent an email out saying, don't worry, it's all on. And I was kind of like thinking, not so keen. And then at the last minute they went, no, we can't do it. So
Too slippery.
yeah, it was out. So I would have pitied it. It's a quiet time of year for property. I would have hated to be hosting open homes, let alone an auction this weekend.
No, the turnout wouldn't have been pretty.
Yeah. Not sure how markets have fared elsewhere, but Sydney would have been a disaster. It's been, there's no data comes through. It's very hard to get any sense of how properties are moving at the moment. All I can go by is properties in my local area still seem to be on the market. But I noticed that you guys at Finney, you've had, I saw the report from the close of Friday. Inquiry's pretty strong.
Yeah, look, it seems to be a quick start to the year. So everyone's had time over the holidays. They've worked out what their plans are for this year and they're jumping straight on them.
What kind of trends are you seeing back in terms of where, I know that you guys deal with investors, what sort of geographic locations or what types of assets are people looking into buying at the moment?
Yeah, we're still seeing a lot in the the Melbourne, Victoria area. I am seeing a bit more of the lower end purchases. So some of the strata lower end ones, that seems to be a sweet spot for people at the moment.
It's going to be really interesting because you've got that kind of lag where all the data, yes, we all know that Melbourne is looking better, but you've got this lag where the data still shows that Melbourne is not going anywhere, but inquiry is coming in thick and fast for that market.
Yeah, a lot of them.
And it's going to be interesting to see where you get that actual swing where suddenly everyone goes.
Everyone's starting to go there.
Yeah. How about yourself, Costa? What are you seeing?
Yeah, well, I'll probably agree with that. Got a few clients that have now started to look to invest this year, and a lot of them are mentioning Melbourne now. It's going to be interesting on where they're looking to invest in Melbourne because it is such a large metropolitan area. So, yeah, give it by the end of the year, I think it will be on the top of pretty much every buyer's agent's list.
It's interesting. Yeah, just offline with one of the team, he was mentioning that one of his friends was looking to buy in the Docklands, Sydney-based. Here's the thing, right? If you're not on the ground, if suddenly it's Melbourne, or whatever the capital city may be for an investor, people suddenly go, I'm going to buy there. And I mean, I did the same myself. And I very nearly bought an apartment last year. And fortunately, my property manager went, I think you can do better than that. Because I'd negotiated a price with the agent. It was all go. Because I looked at the yield and I went, this is absolutely brilliant compared to Sydney. So you're going to get that. You get this sort of flow of buyer interest into markets which have good potential, but maybe the assets they're looking at are not maybe the best. You guys, those brokers, obviously, you're not there to pass. This is the interesting thing. You're not there to pass judgment on what they're buying, but you can see some of the purchasing decisions that people are making.
Yeah, 100%. Well, the one that we're talking about off air was a 32 level, brand new complex. The developer contacted them to, get them to invest in the building. And just that alone probably should raise a few red flags. If you've got a building like that and you're contacting people, it's not like it's a super high end one where you can say, they're only after a certain market, very wealthy 1%er sort of people. Yeah, you sort of got to question, why am I getting contacted by a developer while I'm in another country to purchase in this building? So yeah, you sort of got to put a few question marks on that one.
I do find it interesting, looking at the broader landscape. There's really good data, sort of coming through in terms of forecasting for Perth. still for Brisbane, but there's been so much growth. You wonder how much more there can be. But look, you see much inquiry in those markets at the moment?
Well, Perth is still going well.
Yeah, it is.
The numbers still show that it's increasing year on year, and I think it actually is predicted to outdo all the other capital
double
cities.
digits, I think, still for this year.
But like you said, how long can it go for? I just don't know.
I was actually in touch with an agent in Perth the other day, and everything's still selling for overs. So there's still supply and demand. They've got buyers on their lists.
It's also a funny thing. They went, here's the thing: things sell for overs, and then suddenly it slows, and then it stops, and then it reverses. You see it, sort of a rear view mirror is a wonderful thing, but you can kind of see the signs. Everyone gets caught short, but you can kind of see the signs with hindsight of when a market has really sort of reached its capacity. But look, it's about, I think there's good opportunity. I think even with markets that have stalled, there's still good opportunities. It just means you've got to buy, you've got to do your research. And again, like the chap who was sort of being approached for Docklands, Melbourne's great. There's great yields. There's good capital upside there. But you can equally, even in a market that's destined for growth, you can still make a bad investment.
Certainly.
Yeah, 100%.
We'll take a break there, guys. We'll have a bit of a look at what's going on with lenders when we come back. Welcome back. Thanks for joining us. Broker Daily Uncut. Beck, Costa, Alex with you. Guys, you got the finger on the pulse with lenders. What's happening?
A couple of things came out last week. First Mac trust lending.
Okay.
Now, they will now be including all trusts that you are a guarantor of, part of your servicing.
Okay.
Regardless. Whereas before you can get away with it with an accountant's letter, that no longer will be exist in First Mac trust lending.
And is that the same for all non-bank lenders? I mean, most banks have pulled out of that altogether, from what I understand.
No, there's still a few. So
Okay.
It's
who's still in there from an ADI perspective?
I don't think NAB have done anything.
no, I
Not
don't think
officially, but they're kind of not really in there, though, are they?
No, CBA was still in the mix.
Yeah, I think you just got to be a client of theirs for the past 6 months and stuff like that. But
Yeah.
nothing's changed overall. Yeah.
And I think that's the same with ANZ. So the majors are still hanging in there.
Okay.
Obviously, Macquarie
About Westpac.
pulled out. Westpac have done some unusual things, in regards to retail lending. So they've got all of their trust lendings going through the small business teams now.
Yeah, right.
So don't believe that they've got as much appetite for.
I got the impression with NAB that they wanted to go through private banking rather than through broker.
Yeah. Look, I think they're still doing very simple trusts.
Okay.
At the moment, I mean, everyone's reviewing things as things come
And
to
of course,
light.
Macquarie has gone, nah, we don't have anything to do with it.
Yeah, definitely. They're still doing trust lending on a commercial level.
Yeah, okay.
Just not on a
Just not
retail
resi.
level.
Yeah.
Yeah.
So what about in the non-bank sector then? Sort of First Mac's made this move. How does that compare with the other, with their peers?
I think they're the only one non-bank lender that's come out with anything from memory. I think it's the majors that have come out, but I may be wrong in that sense.
I know Resimac, I believe this is sort of more unofficial, but they are doing extra checks in regards to the trust lending. I think they got a large market share once Macquarie pulled out, but I don't believe they're going to the extent of what First Mac are at the moment. Obviously, we've still got a few other non-bank lenders that are business as usual.
Yeah. It doesn't feel that there is inherent risk in the market at the moment. We're not looking at big vacancy rates anywhere or sort of spiraling prices going down. Australia's typically quite a tight market anyway, but you've still got to have diligence in terms of, sort of what risk you're taking on. And, with a rising sort of buyer's agent proposition and maybe some misguided advice coming from that sector from certain quarters, you've still got to assess, who it is, what structure you're bringing borrowers in.
Yeah, I think from a lender's point of view, their concern and some of their pullback is in regards to default levels.
Yeah.
So they're worried that people are buying 5 properties in 5 different trusts, all of them being negative, and them not having the cash flow to put in.
So that's a fear at the moment rather than a reality, I'm guessing. Or are we seeing that starting to pick up?
I believe there is some of it in the market.
Yeah, okay.
So I think, but I don't think it's a grave concern.
Yeah. And what about, look, we sort of obviously dip into where we're going with rates. It's an ongoing speculation. And look, who knows? I think the RBA is doing a good job of keeping us on our toes. It keeps the population concerned and cognizant around rates rather than going, rates are going to go down and everyone, of course, loosens the belt. What do you see in terms of...
Well, CBA... their 3-year fixed rates, which I couldn't imagine were too popular to begin with, they've increased that from 5.34 to 6.04. Now, again, I don't
It's quite a big jump.
It's a massive jump, yeah. I wouldn't imagine too many people were even going after that to begin with, but by them increasing, it just shows that they are thinking rates may go up. I think we spoke last week on the podcast where inflation figures are better than expected, so it does seem like rates will be on hold. But that fear that they may go up at some time this year still is lingering around. So I think they're just making a play there in regards to the fixed rates.
What kind of demand do you get for fixed rates at the moment?
Look, to be honest, it's still very much a variable market.
Yeah.
Obviously, fixed rates being a little bit higher, people aren't taking them into consideration because they want the cheapest that they can get. And I don't think there's a great fear of the interest rates going up from clients.
Yeah. There was a bit of a gap, I think, towards the end of last year where they were sort of fixed rates you get that sort of little snapshot in time where they're sort of quite attractive to lock in, but that's kind of been and gone from what I can see.
Yeah, there were a few lenders besides CBA that have sort of moved over the last, say, 2 months.
Yeah.
In regards to increasing the fixed rates.
Who are you seeing with sort of sharp and attractive propositions at the moment in the market?
Just
in general. I guess being in market, I mean, look, we know you guys are very much investor focused, often more complex, but who's sort of in market at the moment?
For variable or fixed?
For variable.
Listen, Macquarie are always down. Are always good. I think ING... I was looking in the other day, ING have some good variable rates. Listen, for those vanilla deals, they're very good.
Yeah.
And it just depends on, I guess, your circumstances as well. Like each sort of lender has their own niche and it just depends on sort of the client. Like there's no real vanilla deals anymore.
No.
Those days are sort of gone. Like, I wish it was that easy, but it isn't. So, to say that Macquarie or ING have the best rating, you can take your client there, it's... Yeah, I wouldn't say that. But yeah, probably Macquarie and ING have sort of the best variable rates at the moment from what I'm seeing.
Who are you finding easiest to work with at the moment, Beck? I know. Look, I know it's a difficult question because you've obviously got different customers with different needs, but just sort of broad brush strokes.
Yeah, look, I would say Macquarie is quite easy to deal with. In regards to other lenders, I actually do quite a bit with ING and I find them quite smooth. In just trying to think who else I've been using. Just
what about on the non-bank front?
Depends what I'm doing. So if it's SMSF, First Mac are doing a really quick, good job. If we're dealing with some of the trust lending, Resimac have been wonderful. So yeah.
It's good. Yeah. Okay. All right. We'll take a break. Rewind that. Look, let's take a quick break there, guys. Back in a couple of minutes. Welcome back. Good to have you with us again. Beck, Costa and Alex with you. Broker Daily Uncut. I'm going to ask you a question here, which hasn't sort of been on my mind for a little while, but looking back to 2025, we had the government incentives. Part of the package with the 5% deposit was, sort of no LMI. And having bumped into a couple of the LMI providers at some of the Broker Daily functions, there was certainly concern amongst the providers. And I sort of had an inherent concern about that whole sector because it is an important sort of product, I guess, for borrowers in a particular situation. Are you seeing much demand for LMI? Just give me a bit of an overview about where and if you're seeing that these days.
Yeah, well, it's part of the conversation now. I've got a client at the moment in an SMSF.
Okay.
they've got high servicing but low deposit. Pepper at the moment are doing 90% lend, no LMI. So we're pretty much going to be taking the application there.
Okay.
And outside of SMSF, because we deal with a lot of investors, they see the value in paying LMI. You may pay $7,000, $8,000 for LMI, but you're saving how much money in the long run by not paying, overs for the property a year later by the time you save that.
So you're still seeing borrowers that are see LMI as an enabler.
100%.
Yeah.
Listen, there are that little fraction of people that don't like it because they're like, well, what am I paying the money for? But again, because we deal with a lot of investors, they see the value in it. No one wants to pay money for no reason, but if you can see the value in it, people are willing to do it.
How about you, Bag?
Yeah, look, to be honest, the same. So I've got people that are more than happy to pay lenders mortgage insurance to mean that they can get in the market because they see that whatever growth they're going to get on the property that they're looking at buying is going to far outweigh the cost of the lender's mortgage insurance, and then waiting that extra time to have the additional funds needed to do a 20% deposit.
It's a really interesting space to be in as a broker, because you have to have a focus on the best outcomes for the buyer. Sometimes they may want to try and spread themselves way for thin because they just want to get what they want to get, and so they'll take any option available. But it's quite a delicate balance when to recommend a product that can be an enabler and when to kind of warn against stepping outside of your depth.
Yeah, look, I mean, for me, in a lot of instances, I'll give clients options and I'll go, look, this is what you could achieve with the money that you've got at 20%. This is what you could achieve with the money at the 10, 12% level. You work with your buyer's agent on what property price you need, and you can make your decision from there. Like
you said, Costa, you got a customer with a low deposit but high serviceability.
Yeah.
That's obviously, and you've got to get capital uplift or a really sort of high yield to offset the additional expense.
Well, they came to me asking, telling me I'm willing to pay lender's mortgage insurance because they sort of knew already that they were going to be deposit constrained. So it's basically, it's on their mind from the get-go.
Years and years and years ago, back to when Genworth was Genworth, myself and Phil, we worked for them and did comms, and just the role of educating borrowers and also brokers around LMI. And it seems terribly simple. I'm going back sort of probably 25 years ago. It was a real challenge, and you've got some real detractors from LMI, but then you've got, I think, for brokers, understanding it, really genuinely understanding what the proposition is, but then trying to educate, borrowers don't grasp a lot around the borrowing aspects of buying anyway. So it can sometimes be an additional element that adds confusion.
Yeah, I think as long as we're giving the information so they can make an informed choice, that's the best thing we can do for them.
Yeah. Good. What's on for the week ahead?
Busy. Meetings, servicing calculators, all the fun stuff. So, yeah.
Yourself?
Yeah. No, quite a few client meetings. So I've, been booked out a lot this week. So
are you finding sort of refis, or are you getting new business coming through?
This week tends to be a lot of new business.
Yeah.
So I do have refis in the pipeline, but first conversations with some clients. So we'll see what they need.
Exciting times. Guys, thanks so much. Really appreciate your time. For everyone else, really appreciate you joining us for the podcast. We love your feedback. Don't forget to let us know what you think. Have a great week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.